And we now have with us Ken Gishinga to further expound on some of the key issues happening throughout the week. And thanks, Ken, for joining us.
Thanks for having me.
Well, what do you make of the Barclays Africa Markets Index showing Kenya's fifth most attractive destination?
I thought it was an interesting report. They project Kenya to grow at 5.5% this year on the back of better rainfall, the back of lower political temperature. And I think it's a fantastic sort of like outlook. It's a very rosy outlook. If you look at the Stanbic report also, they projected at 5.6% growth on the back of improved agriculture, tourism, and even the Africa Development Bank had their own report, which projected a sort of better economic outlook for the continent. So net, it's a rosy story. But you remember the Nigerian writer, Chimamanda Adichie, who talked about the dangers of a single story.
Sure.
And I think the vocation of an economist is to look at both sides of the story. And I think they have prosecuted the macro case very well. But for me, I'm looking at more the micro case. These are households that are struggling. We saw KCB auctioning 67 cars only yesterday. It's not a secret anymore that at the Nairobi City Council, there is some challenges within the leadership. And Nairobi has 60% of the country's GDP. So what does that mean for the country as a whole? So for me, these are the micro issues that I think we need to be alive to, in as much as we sort of like look at the rosy pictures that the banks want to tell us.
And you raise pertinent issues, Ken, because if you ask the mama mboga down on the streets or that border rider, are you feeling the economic transformation? Of course, the story would be different, bearing in mind fuel prices rose up this week to 106 for super petrol. Kerosene also went up by just about 3 shillings. Diesel, which is a big factor for manufacturers and also for the transport business. Where are we headed as an economy? Is it a passing cloud, or we ought to buckle up for the bumpy ride?
It's a mixed narrative. And you're right, because I do talk to ordinary traders every day. And some of you will tell them that business is starting to pick up. Uchumi right next door is already restocking. We're seeing restaurants coming up. But yeah, there's a section of people that feel a bit left behind when they look at fuel prices, which affects food prices. And I think for me, that's where the question needs to be looked at. For example, these people who've been auctioned off, what for me, that has happened, but I'm not seeing any innovation around what we call credit rehabilitation. This is taking people who have defaulted, they've been auctioned, but thinking of a very systematic way of returning them back to the mainstream financial sector. I think there's a piece of innovation there that is missing. In Kenya, it's almost once you're blacklisted, you're damned and you're forgotten. But if you go to more developed...
You're condemned for debt distress.
Correct. But if you go to more developed countries like the United States, the whole credit repair, credit rehabilitation, it's such a big business, and I'm surprised that we don't see innovation around that. Because these are people who banks could eventually lend to in the next 2, 3, 4 years. Because yes, maybe your business did not do very well last year, because last year was a very difficult year, but that does not mean that in the next 2, 3 years, you'll not be able. So I think there needs to be a closed loop in how to bring all those people who've been sort of auctioned off back to the mainstream financial services. And banks need to be part of this conversation.
You raise a very important point, Ken, because if you look at the exit strategy for someone who is defaulting, assuming you bought a house under a mortgage plan, and eventually things did not work out as you had budgeted, and the bank repossesses the asset. And we've seen institutions selling the price of the repossessed asset at far lower prices. Do you feel there's an issue of policy that ought to be addressed in the future?
Well, that has changed over the last 2 years. I think the new legislation coming in means that a house cannot be auctioned for less than, I think, 75% of the market value. So it's a much better situation than it used to be, let's say, 10 years ago, when auctioneers could sometimes collaborate with unscrupulous traders and sell multi-million shilling home at far below the market rate. So I think the legislation has helped. But for me, as you said, once you are in that situation, you almost feel condemned. And sometimes it's for situations that were beyond your control. Maybe your business just did not prosper because of a very difficult political year. So you almost feel condemned. So for me, I think banks, in as much as they want to sell products, loan products, I think they need to handhold their customers to the extent that if, even though you've defaulted, it's not the end of the road. There's still a future and we can rehabilitate you. So for me, I don't see that conversation in a very pervasive way in the Kenyan economy. And maybe that's where banks need to consider, because we're talking of big chunks of the market that have been blacklisted or that have been sort of auctioned off.
The fall of the hammer, as they call it.
Yeah.
And let's shift gears a bit. And Carrefour has taken over Nakumatt Junction. This becomes the 4th store. Of course, they have one at the Two Rivers Mall. They took over the Thika Road Mall, where Nakumatt was the anchor tenant. And the big picture from where I sit is there's a supply chain that's behind all this, the local supply chain that have been thriving out of Nakumatt's, Tuskys, the Naivases. And all these people all of a sudden, they ought to look for new supply chains, be it the Naivases and the Tuskys, or Carrefour. Of course, as you know, their model is to import some of the items that they actually sell. Where does this place the SMEs that have always relied on such a big retailer?
If you look at Nakumatt, it held such a pivotal role in the economy. In fact, the people who said when Nakumatt coughed, the whole economy would shake, because there's so many thousands of suppliers who depended on Nakumatt's livelihood. I know people who went 1 year without being paid, but they always had this optimistic sense that Nakumatt is too big to fail. At the end of the day, the government will come in or an investor will come in, so it's okay if we continue extending to them a line of credit, because there are companies in Kenya that are too big to fail. Sadly, that was not the case. And we've seen Nakumatt having such a fall from grace. And I think it's been very lucky for Carrefour, if you ask me. I don't think anywhere in their market entry strategy had they anticipated that they'll be opening 4 hypermarkets in one city. I think maximum was 1 or 2.
Oh, yeah.
But right now, I think they have maybe they have exceeded their targets for probably the next 2-3 years.
Sure.
And good for them. That's the nature of capitalism. But for me, when I really think about, as you say, one corporate in Kenya supports almost 1,000 suppliers. What happens to these suppliers? I think Carrefour has been gracious enough to take on board many of the suppliers. I know their conditions are a bit more stringent in what you can supply and what you cannot. But I think it's going to raise the game. It's going to raise, because at the end of the day, it's about the customer, and the customer needs to get value.
Oh, yes.
And for me, the competition authority needs to come in and just make sure the retail sector is evenly placed, so that anybody who's shopping at Naivas or Carrefour or any of the smaller ones up in Utawala or in the suburbs of Nairobi, that really they're getting value for their money. And as long as that's the case, then we're always going to have a very competitive, lively retail sector.
All right.
Yeah.
Many thanks, Ken.
Thank you so much for having me.
Valuable insights there
Always.
as we dissect through some of the issues that have been affecting the economy throughout the week.